Oh, I think it's fair. Huh? This says the Bandra boy. Okay. All right, guys. Let's come back to the market because this excitement is going to play out through the course of the day. But we also have to negotiate the market. Dipan Mehta is with us from Elixir Equities. Dipan, I don't know. I mean, if you want to start with cricket, go right ahead because it's a high, right? The market's on a high. Banks are firing. We have the team coming back home. Real feel-good morning this Thursday.
Yeah, good morning. Thank you for having me on your show, Surbi. Yeah, I think it's a great morning. Also, markets all-time high, economy doing exceedingly well. We are entering the earnings season with a lot of hope that corporate earnings also will be much improved. And after so many years, decade and a half, we have got the World Cup back. So a lot of reasons to celebrate. And I think let's just bask in this glory while we can. And then, of course, there are problems afterwards, but we'll deal with them later. But for the time being, I think these are great times for the country. And I always said that, being in the right place at the right time makes all the difference. And I think that's what our generation is. We are in the right place at the right time.
All right, Dipan, got that about, that. But let's focus on the markets then, Dipan. And I wanted to ask you about ITD Cementation. If I remember correctly, I think this was a stock that you were positive on, a while ago. Now they've come out with this update where the promoter entity is saying they could potentially look at selling their stake. The stock is up 35% in the last 1 month or so. Valuations as well, it's not very, very cheap. And I'm wondering who's willing to sign that check of around 5,000 crores to buy out the promoter's stake. If it opens higher, what would you do with it?
Yeah, good morning, Nigel. I think they'll find many buyers for that stake. It's a very well-managed company, exceptional track record, qualifies for a lot of projects, difficult projects on the marine side, on the transportation side, especially building metros. And it has a diverse loan book as well. So a lot of earning visibility as well. And a very rich, I would say, human resources asset is what the company holds. So I think whoever is looking at buying the company will be getting a company which can grow continuously for several years. I would rate it amongst the best capital goods or engineering construction company. But of course, my views are a bit biased because we and our clients are invested in it. So that's a matter of disclosure. And yes, I think valuations are high compared to historical what we have been paying as a price to earnings multiple. But this is one company, if you notice, the corporate governance standards have been very, very good. And they have not got into many of the other issues which some of the other engineering construction companies have got into, like using their own capital to get into projects business, like bidding for hybrid annuity models or build, operate, transfer models. So they've kept their balance sheet quality and the return ratio is also pretty much intact. So very positive on the company. And let's see what actually turns out in terms of who the new owners are, if at all.
No, I asked you that because you were in early. I recall I did a interview with the management at their office in November 2022. And, you were tracking that quite closely at that point of time. So you're saying you'll hold on to that position and you believe there'll be ample amount of buyers. Got that, Dipan. Let's talk about a couple of other big stocks then. We had a few updates that came in. L&T Finance, you had Bajaj Finance as well that came out. Anything you liked in particular?
Well, I think both L&T Finance and Bajaj Finance reported quarterly numbers which are more or less in line. Very impressive that even at such high base, they are growing as they are. And Bajaj Finance in particular, it has kept its NPAs pretty much under control. L&T Finance has had its issues and challenges with NPAs and collections. But Bajaj Finance, the collections have been pristine. And one small sentence in Bajaj Finance's release, which I really liked, is that the digital loans, which had been curtailed, now they can go ahead and start releasing those loans as well. So the sort of minor compliance overhead which was there on Bajaj Finance, that also has completely cleared up. Valuation-wise, it is very reasonable. I think BFL and L&T Finance are going at valuations which are well below their, I think, 3-4 year averages as well. And in markets like this, when you want to look for companies where valuations are attractive and still growth is intact, I would go with both of these companies. I think a measure of disclosure, we and our clients are invested in it.
All right. Dipan, coming back to you with more questions in a bit. But Anuj is here, which we all need sometimes every day. Well, let's get back to Dipan. And we have a management waiting by as well, which we'll get to in just a bit. Dipan, morning. Thank you for joining in. Prashant here. By the way, sort of beautiful setup behind. It's beautiful home. Congratulations.
Thank you. It's even lovely here in the monsoons because it's greenery all around. Thank you very much for your compliment.
Just this entire PSU, actually within PSUs, right? Yesterday it was a wide variety of names. Mazgaon, there was, Cochin, Cochin Shipyard, that is, so two defense names. There was IREDA, which is up 20% this week. We had the management with us earlier on Monday. There was Hoodco, Moil, Nigel talked about Moil yesterday. And the RECs, the PFCs of the world. What do you like in this space? I'm reading a couple of notes on, there was a Reuters story about the government asking sort of companies to, sort of put in orders worth some, I think it was what, $30 billion over the next 3 years because you've got to get capacity up and running and we're falling short of power capacity. And I'm talking about the coal side here. And of course, whatever is happening on renewables is happening. Stocks have run up quite a bit, but as the Bernstein analyst told us, over the next 3 years, we'll add 2x the capacity that we added in the past 3 years or so. So it's a big runway in that sense. What do you like here, Dipan?
So I think in terms of valuation, PFC and RAC really are the cheapest, and they are trading at valuations, I think, or about below the PSU banks. And I think their growth rate should significantly move up from this year onwards. Already last year was pretty decent. But there's a problem in terms of earnings volatility in both these companies. But if you're able to get past that, then I think there is a case for P multiples to move up over there. And when we are discussing this entire PSU basket and the way these stocks are moved up, of course, I think the performance has significantly improved across the board, across all PSUs in all the different industries. But there's also the aspect that their share capital is very tight and very concentrated, and the floating stock is extremely low. And what has happened is that a lot of portfolio managers and mutual fund managers have a lot of stocks of these PSU companies. And as and when they're getting more funds in, it's not that ideas are popping up every now and then. They're going back to the same ideas, allocating stock to the same companies which they are already owning. And then when even small quantum of buying is coming in these counters, we are seeing an even exaggerated up move because of low floating stock. So one should keep that in mind. As also the fact that a lot of PSUs are trading at extremely expensive multiples, especially defense companies, shipbuilders. So investors should be mindful of that. And I would like to avoid all PSU stocks where there is a high degree of overvaluation, which is why my choice is for maybe PFC, RAC, or some of the PSU banks, if at all.
Okay, got it. Dipan, stay on. We'll have more questions for you in just a bit. But